You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time once again for TWIFO, This Week in Futures Options, a program where we break down the week that was, and indeed, in some cases still is, from a futures options perspective. All the stuff on the other side of the fence, the commodities, the index options get in there too. You know, all of your fun stuff, your ags, all the lean hogs, all the crazy stuff we don't get a chance to talk about in a lot of the other programs, breaking down the vol, the skew, the hot strikes, the hot action, all the cool stuff from this week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you're new to TWIFO, first off, welcome. Secondly, there's a whole universe of other shows out there for you guys to check out. The easiest place to get them all, of course, if you haven't already done so, upgrade your subscription wherever you get this fine show, iTunes, Stitcher, our website, wherever. Upgrade to the whole kit and caboodle. That is the full network feed. Then you get the morning news show, you get the advisors option, you get the option block, you get vol views, all that good stuff. So many shows, 15 total. Can't even remember them all. Trading Tech Talk, etc., so on and so forth. You guys will not be wanting for options content. I guarantee you that. We will keep you guys busy. Maybe you'll learn something. Maybe you have some fun. Maybe even laugh once in a while every now and then, too. No guarantees on the latter, but we try. However, of course, the Hardcore Zone, you also offer a little bonus for you guys as well. All you guys who can join us live every Friday, 1:30 p.m. Central via Mixlr, MIXLR. Grab that link. We put it out every week. You save it, set it, and forget it. You can join us there. However you listen, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We like them all. We do, believe it or not, we do actually like to hear from you guys. And joining me on the program today, no, unfortunately, I'm not joined by my usual cohort, my usual partner in crime, Mr. Nick Howard from Bantix Technologies. He is stuck, unfortunately, on a plane back east somewhere around New York City right now, so he won't be joining us. That means, once again, he gets double duty. Second time in a couple of weeks here, he gets to fill in on the old CME Group hot seat. Once again, good old Uncle Mike Tusa from RCM Wealth Advisors, a.k.a. he of Silver Collar infamy. Uncle Mike, welcome back to TWIFO. It hasn't been that long. It's only been a couple of weeks, but welcome back, sir.
Always happy to be here, and that introduction, it really gets me fired up, Mark. I got to compliment you on all the introductions that you have for all your shows. It makes me think of when I was a kid, how I'd get excited watching Mel Allen's This Week in Baseball. And that's what I think about when I come on this show. So I'm pumped up. I got my old Andre Dawson fan memories going from when I was a kid watching baseball, and let's get after it. This is going to be a great show.
I'm glad to hear you're pumped. I'm always pumped getting into this show because it's kind of the last show of our broadcast week, and it's exciting to do, and I always got to get Nick a little fired up. He's a bit of a slow burn, so I'm glad to hear that you're fired up. Speaking of fired up, let's get right into what your wheelhouse, sir. I've been talking and only slightly mocking you for the last, 4 or 5 months now over there on the option block because you chose in your infinite wisdom, sir, to set up this very elaborate, very long-term collar in silver. I mean, you like a lot of SLV, but you can replicate the same thing, of course, in the options on the big futures as well. Give our listeners a quick update if they missed your last appearance a couple weeks ago on exactly what the heck you did. And then B, I know you've been quite busy on it lately, so walk us through what you've been doing. I know you like doing stuff on your trades. You like adjusting and tweaking. So what have you been up to out there in Silverland over the past, actually not even a week, couple days?
Quite a bit, actually. I've had 2 separate silver collars with which I've done. The first one, you can continue to make fun of me on because I still haven't done much on it. At the beginning of the year, I put on a silver collar to where I believe silver was at around 17 at the time, around 17, and I was able to buy a 12 put and sell a 25 call for about the same price. And all I've done since then on that, silver went down once, and I bought back the short call for like 40 cents, something like that. And I'm very confident that I'll be able to sell some type of premium to make up for the extra 40 cents of long time decay on it. So you have every right to continue to mock me and make fun of me on that one because not a lot has been done on that one. However, there was one to where I think this one really is a huge thing that you can look at. And for both of them, they have to do with the reverse skew that exists in commodity options. We talked about a little bit on the show when I was on here a couple weeks ago. Oftentimes like if you were to look at like the S&P E-mini options or the big contract for that matter, oftentimes you'll see that out-of-the-money puts are priced higher than out-of-the-money calls. That's because there's more fear of something bad happening to the downside. Stocks typically don't melt up, meaning you have a stock market meltdown to where all of a sudden, something bad happened, and stocks go down rather rapidly, and that's what the great fear is. Stocks seldom just melt up. I guess maybe if we had like the cure for cancer, or if somehow global terror was wiped out in just the drop of a hat or something along those lines, maybe then the markets would go higher all of a sudden very quickly. But typically when stocks are going to move quickly, it's going to be to the downside, and it's going to be because something bad happened. The commodity world, it's a little bit different, meaning that if something bad happens all of a sudden, there's a lot of fear that exists, and there's usually a rush from stocks to commodities. So because of that, calls, out of the money calls are typically priced more expensive than puts. So what works out on this is if you're buying the underlying and you're selling a covered call against the underlying futures contract that you're buying, oftentimes you're able to do it at a price that's greater than what the put would be on the downside. So, for example, let's say the silver contract is at 18, let's say. Oftentimes, the 19 or let's say that you were looking to sell the 20 covered call. If you go far enough out, and that's $2 above where the underlying would be, if you were to look at the 16 put, oftentimes you could get more money for the 20 call than you'd have to pay for the 16 put because of the reasons with which I just described. Now, the skew is something that I think it's very fascinating, for one, but particularly in the commodity world. So let's go back in time to September 2nd, 2016. It was a wonderful time back then. Well, actually, it was very similar to how it is now. But nonetheless, as a wealth advisor, I like to look for alternatives for my clients. And right now, I personally believe that bonds are not a good place to invest money at this point. Not to say that I don't have any clients in any bonds at all. They make sense for certain people. But if someone doesn't need income and they're looking for a place to have some type of relatively safe investment, then I think that using this as kind of a commodity skew is something that can be of benefit to them. So on September 2nd of 2016, what I did was as kind of a replacement for bonds, and this is something that you could do with futures as well. I actually bought SLV, the ETF that tracks silver, at $18.30, sold a 20 call for January of 2018, and bought an 18 put for 20 of 18. Now, the collar itself was a cost of 16 cents. And I had 30 cents of additional downside risk on the underlying. So meaning that in theory, if silver went to zero or, well, I guess to $17.99 or below, and I did absolutely nothing on expiration, the most I could possibly lose was 46 cents per 100 shares. And by doing that, I had 16 cents of time decay risk and 30 cents of risk on the underlying. Now, I liked that because of the fact that I was risking 46 cents for the potential to gain $1.54. And this is one where it was guaranteed setup to where I know that I know exactly what my risk would be and I know exactly what my reward would be. Now, the fun part about this is the fact that I know that it only has a very minimal amount of risk to it. Whereas if I were to invest in a bond, just to go out and buy some, some bonds on a stock, some corporate bonds, some muni bonds, that type of thing, I know that I couldn't guarantee that small of a risk percentage-wise to my clients. And unless interest rates are going to go down or for some reason their credit rating goes way up or for whatever reason we just have a mad demand on bonds and the price of that underlying just goes through the roof on bonds, probably not going to get that big of a reward either on it. So by setting up this risk reward, I felt very confident and very comfortable with what was happening. Now, needless to say, silver got the tar beat out of it between last year and this year at certain points in time. So had to make some adjustments to it, had to do a few things to it. First thing that I did to it was I actually sat on this until July of this past year. July 5th of 2017, I actually bought to cover the covered call, bought it back for 22 cents. So by doing that, now all of a sudden I have, instead of the 46 cents of risk, I now have 66 cents of risk. But I have unlimited upside and I have nothing hindering my covered call. Now, another thing that I did with this, I also actually sold the 18 put for a profit of 89 cents, sold it at $3.05. So right there, I have a little bit of a profit going. Now, a few other things that I did that I think really helped and made a lot of sense, quite frankly, is I actually rolled down that the long put to the 16.5 put that expires a week from today, September. And by doing that, that gave me the ability to participate on some upside with silver and not have that $1.50 of, what do we call it, maybe neutral parity, so to speak. So from 16.50 to 18, whereas if I still had that long 18 put there, I wouldn't have made any profit on that. But because of the fact that I rolled it down, I was able to take some profit on it. Now, long story short, yesterday, as a matter of fact, I finally hit the reset button on this trade, meaning that with getting in, getting out, doing a few calls, doing a few puts, and by saying getting in and getting out, I'm not doing that frequent of trading on this. So to give you an idea of it, since I got into it, I put the initial collar on. I did 1, 2, 3, 4, 5 different adjustments over a 9-month period. So I'm not doing a lot with this, and a lot of times what I am doing on it, I'm sorry, actually 4 adjustments, because actually one of the puts that I have on, I still have going for a penny. So if silver goes to 0 over the weekend, I'm going to be a very happy man because of this lottery ticket I have. But my point is that a lot of times I'm just getting out of these covered calls for like a nickel or something along those lines, and these are what I kind of call no-brainer exits. And by doing that, this is one to where I'm actually very proud to say the underlying went down roughly 6%, and we are actually break even on this trade from all the things with which we are doing on this over the course of 1 year. And this is the magic of options, and this can be done with futures options, equity options, any kind of options if you do it on a very prudent manner. I didn't do a ton of adjustments on this. Like I said, I'm counting 1, 2, 3, literally 4 different adjustments from start to finish on this over a 1-year period. And these are a lot of no-brainer ones to where if you look at it and say, okay, well, I have a 100 delta put option. It's for a 99 delta put option. It's trading pretty much at parity. Why wouldn't I roll that in some way, shape, or form? And just by doing a few of these no-brainer rolls over the course of a year, something that I was totally, obviously very wrong on the underlying, I'm able to break even on. And right now I've basically hit the reset button on the trade. I'm starting over doing the same thing. And if silver just has a little bit of a rally, this is going to be a very nice rate of return for the people that we've been doing this with over the course of the last year. Just in the meantime, we've been able to not take on, we're about break even. I'd have to look to see how it's doing today. But for the time being, I would say that we're within a few pennies of breaking even and likely ahead a little bit on this trade.
There you go, sir. Well done. I defy you listeners out there to find a more detailed discussion of silver collars anywhere out there on the planet. Uncle Mike, I think you may hold the record there for most silver collar discussion. For whatever reason, silver doesn't come up a lot on some of the other ones. You know, people like to talk gold and everything, but silver seems to be a little even more niche for the metals guys. So I'm glad to hear you've got so much love for the old silver, whether it's an SLV or the futures hour, because all kinds of flavors that it comes in. But I'm glad to hear you've got some love and that it's actually working out for you, sir. And hey, you got that crazy nice put for when silver goes to 0 right in your back pocket, right?
That's true. If silver goes to 0 in the next week, and I guess that's another point to add on to this, is that there's oftentimes, I know we talk about on the option block a lot of times, that if your option is trading at just maybe a nickel or a tick in this case on the future side of it, whatever the case may be, if your short option is very cheap like that, there's the argument that a lot of people say, oh, just let the option expire worthless. But I think that you need to take it off the table. Just because of the fact that, number one, it's nice not having stress going into weekends, especially when there's a whole batch of hurricanes headed towards the southeast part of the United States, quite frankly. And the second reason is that I've talked about on the option block when, if I have an option that's like 0 cents by a penny, something with no bid on it, I'm not going to close it and it has a week left on it. That's a free lottery ticket. And right now, I have a free lottery ticket going on silver for the next week. And I highly doubt it's going to happen, but if for whatever reason silver drops 20% over the course of the next week, I'm going to be a happy man. And there's going to be some idiot on the other side of that trade that's not going to be very happy. So I would encourage everyone to, if you have an option that is very low in value and you're on the short side of it, folks, I always close those things. I shouldn't say always. I would say 99.9% of the time I close those things.
Yeah, good point. And really, commodities, unlike stocks, really have a hard case for them ever going to 0 in any sort of practical purpose. So a little safety for the put sellers and maybe, who knows, Uncle Mike could get a nice little drop to the downside. It can't move down, that's for sure. Speaking of moving, silver did move a little bit this week. Ended up about a quarter of a handle or so out there on the futures, right around 1.5% or so out there, right a little bit north of the 18 handle, depending on where you're looking out there on the term structure. Vol actually coming in pretty aggressively, which is kind of interesting, particularly in the nearer portions of the curve. Of course, a lot of that really is gamma. You get a little bit farther out, vol kind of mixed to unched, so a little bit of a mixed bag out there from a vol perspective. Skew also not really moving a heck of a lot this week. I know you'd be sad to hear, Uncle Mike, because you're such a big silver skew trader, but not a huge move out there in skew land. Again, listeners, you guys can follow along with all those reports that we do live here on the show, cmegroup.com/TWIFO, TWIFO. Play along. It's free. You get all this data pretty much for free, and there's pretty much no other way to get a lot of this commodity data, quite frankly. So have at it if you do trade. There's a reason why CME uses all this data themselves. It's because it's hard to get. So check it out, cmegroup.com/TWIFO. To learn more. Looking at the silver stuff for this week, it was an interesting week. Open interest actually pretty strong, up nearly 5% this week, which is pretty robust for silver. And if you're saying, silver settled out right around a little bit north of that 18 handle, that's pretty much where the hot options action was for this week as well out there in the front month. 18 contracts trading nearly 4,000 on the week. The lion's share coming on Tuesday, actually, 2,600 again. That was kind of a crazy day. We saw volatility exploding in a lot of products in the indices and others. People were flying to different products for different types of quality, and silver could be seen amongst those, hence a big print that day. The rest of the week, kind of light, so total, except nearly 4,000, so over half coming on that one big Tuesday print. Similar numbers for the 18 half calls as well out there in October. Just a tick under 4,000 there as well, and about 2,000 and change coming on Tuesday as well. So it could have potentially been a bit of vertical there as well. 18 half. The rest of the week, pretty light. Today, actually pretty active, about nearly 800 contracts going up today. Then it kind of falls off a little bit. Number 3, the 19s with about 2,600. And then the 18 puts coming in number 4, about 1,700 contracts. Not a lot of love for the puts. Maybe that'll make Uncle Mike a little sad. I don't know. Not a lot of love for the 18 puts. Only 1,700 contracts. Almost a good chunk of those, about 2/3, trading today. About 1,200 of those going up today. So some interest in some OCC 18 puts going in today. The rest of the week, pretty anemic on those, which is kind of interesting. And looking across the broad span of expirations, as we were wont to do in a lot of the metals products, not a lot of action really going up in either the weeklies or the far longer term stuff as well. It's pretty much all concentrated straight in that OCC contract. So that's where the action was this week. Of course, if we're talking silver, we do have to talk the flip side there, Uncle Mike. Another shiny metal you like to play in as well, which is gold. I don't think you have any elaborate gold collars on the moment. Maybe, who knows? Maybe you'll surprise us. But anything cooking for you out there in gold options land? A, and then B, what are your thoughts on the main shiny stuff these days? A lot of action out there these days with threats of North Korea, imminent hurricanes coming in. A lot of people looking for a little bit of quality, maybe seeing gold as that. So what are your thoughts out there on all things gold these days?
Gold's been on fire lately over the course of the last few weeks. Definitely been a run up in that. I always view silver as kind of the poor man's gold, and anyone who's listened to the option block knows that I've done a lot with gold through the years. Just right now, I'm just trying to stay laser focused on silver at this point in time. But what's interesting about what's happening now is that silver kind of has something that's a little bit twofold on it. Silver actually has some industrial uses to it. Gold, it's just you kind of look at it and it's shiny. Besides jewelry, it really doesn't have much use to it like silver would. So if we do have a huge scare, like let's say, for example, that, and I honestly pray that this does not happen. I don't want any of this to happen over the weekend. But let's say that we just have worst hurricane results ever in the history of the United States that come to the southeast U.S. If something were to happen like that, I would see gold rising more than silver would. I think silver would rise up with it, but I could see gold having more of a rise than silver just out of sheer paranoia, quite honestly. Silver is something that it would rise, and then I could see it still rising, but because of the fact that silver has a little bit of industrial use to it, it's not quite as shiny. It's not quite as much of a fear metal as gold would be. So with that, Definitely have my eyes on gold, definitely looking for things on it. But for the time being, silver is kind of where I am hanging my hat at this point.
Silver, in many ways, quite literally the poor man's gold in a lot of ways out there. Obviously, a much cheaper metal, but still shiny, still nice, still good stuff. Looking at the week that was out here in gold, gold. People have been talking for a while. Until the last couple of weeks, they were saying, when we're going to have this upside rally break through 1,300. Well, we saw that very recently, and this week the rally continued up another 25 handles or so out there, right around the 13.5 level or so now. So pretty much. Not that long ago on the show, we were talking 1,200 or 1,300, what we were going to break first. Now it's the debate 1,300 again or 1,400. So we're creeping up there, right? Kind of a smack dab in the middle of that range, up about 1.5% in the futures out there for the week. And we talk with gold. Gold's a little bit of a different beast. People often assume, and Mike referred to it earlier, the kind of that inverse skew out there in the metals and a lot of commodities, but the metals in particular. Gold's been a good exhibitor of that of late. The gold bugs are always bidding this stuff up, and then when you have these strong upside moves, people just tend to flock into upside in gold. So the calls are juicy, and so what we see is times like this when the underlying moves up, we see vol actually tick up a little bit. That's what we saw again this week. Vol up sometimes a full point, depending on the month that you're looking at out here. But vol is definitely up strong again as you move up that skew, move up that curve. You're going to see a little bit more richness come into this, which is probably contrary to a lot of equity and index options traders who are used to upside equals low vol, downside equals higher vol. Not the case at all, which is why collars are so enticing out there in the metals land. And the risk reversal actually coming off a little bit out there in quick skew land. You can click on that for yourselves and see all the data. Cool charts out there. Uncle Mikey, if you haven't been using quick skew, you should be out there for your collars because it shows you so nicely the calls and the puts kind of broken down independently, which is kind of cool. I don't know any other platform that really does that. So we use it a lot here when we're looking at, collars and also just, what's going on independently out there, whether it's metals or S&P skew, whatever the case may be. It's a good gauge for what's going on independently because at the end of the day, the calls and the puts, two separate beasts, and they trade separately. And so you have to kind of look at them that way. When you put out just one number, let's say for a skew, it doesn't really tell you the full picture. Open interest pretty strong this week as well, up nearly 4%. And when we're talking gold, we're talking obviously much higher numbers than we're talking with silver. Gold is really one of the leading metals when it comes to just action out there. And a similar story in terms of where the action was concentrated for this past week. Still, we were talking about 1,300, 1,400. That dance, that risk reversal / triangle, call it what you will. Surprise, surprise. The front month 13.5 was where all the action was this week. So right in the middle, right where we pretty much settled out in the futures as well, with about 10,000 and change of those bad boys going up this week. Pretty evenly split earlier in the week, and then we saw a big chunk of about 4,000 and change going up on Thursday. Today, somewhat light. Again, this was a truncated week, listeners, for the holiday here in the U.S., but still about 10,000 and change, making it pretty much number one with a bullet this week. Then we actually, if you want to see what was number two, we actually got to go out a little bit. Got to go all the way out to Dees of 2017 to the 1400s. Someone getting a little bit of some upside love perhaps here. The 1400s trading about nearly 7,000 contracts this week. Over half of those, just about almost exactly half, almost 3,500 going up on Tuesday alone. The rest of them kind of spread out throughout the week. Actually, a lot of that, though, is kind of OI net unched on the strike. So a lot of actually back and forth. It wasn't just opening, maybe call buying as you might expect, or even overriding. It was just back and forth trading. Again, those even numbers, people tend to gravitate to those, particularly in the metals, for some reason. Then we go back to October for what else was lighting it up. And number three there, again, 1,300, 1,400, the 1,300 puts coming in number three, with about 6,300 or so of those lighting it up, with about 2,300 coming on Tuesday. Pretty anemic today, less than 1,000, and that was, of course, actually a good chunk of that opening, so some opening on those strikes out there as well. And we like to look, when we're talking metals, we like to look a little bit farther, a little bit more outlier as well to see kind of what's cooking out there. Once again, the weeklies in gold not really delivering a lot of value. I don't know what it is, why the weeklies and the big futures options, for whatever reason, people haven't gravitated towards those. But they do like some of the longer term stuff, including we saw this week. We've got the March. Actually, these are March 2018. 12 quarter puts going up about 1,200 times this week. So some people are looking for a little bit of downside. Pretty much all of that on Tuesday, and all that opening. So opening puts on the downside there. If that's not enough, we go out to June of 2018 to see the 1500s, a little bit farther out, also trading about 1100 contracts this week. And again, with that, pretty much all that in one big print on Wednesday. Again, pretty much all that opening. So opening on both sides of the spectrum out there. And if you go way the far out, way the far up, you go to Dees 2019, you see a 200 lot. A 200 lot of the 1900 calls. Uncle Mike, you can admit it. That was probably you. You bought 250 of these 1900 calls in Dees 2019. You know you're a gold bull, right?
Oh, I already know I'm a gold bull. There's no secret on that. But I have to say that was honestly not me that did that trade. Although it does look like a lot of fun.
Yeah, a little bit of a lottery ticket out there in Goldland. I don't know, Mike. Maybe does it your mind? It's kind of gold to me is kind of reminiscent in a lot of ways to Apple back kind of in the heyday, where it's just there still are the zealots out there, and they will hear no wrong spoken about gold. Do you get a similar sense about that there's still that cadre of gold bugs, or is it become so mainstream now that's kind of gone away?
If it wasn't illegal for me to tell stories about some of the heated conversations I've had with clients at times on gold and Apple, they'd be some very interesting stories I could tell. But gold, if you talk to anyone that likes Apple, it's difficult to convince them that they actually need a hedge. And when it's down, it's difficult to convince them even that they needed it in the first place, because they just want to buy more of it all the time. And a true Apple bull, a true hardcore Apple bull, and gold's very similar. If you talk to a gold bull, a lot of times it reminds me of, I don't know if you ever watched the old cartoon DuckTales back in the 80s with Scrooge McDuck when he had gold fever. It's very much, there's a lot of people that like gold that are like that, in that they're honestly more concerned with being right than they are, they're more concerned with just being right, that gold will go up at some point, than they are about making money. I mean, it is quite the obsession. Now, I am a gold bull. I like to think that I'm not obsessed, but I am a gold bull, and I would say that a lot of my fellow gold bulls, I'm a minor gold bull, I would say, by comparison to most people out there who are gold bulls. I think there's a lot of reason to believe that gold will go up over time, but it's difficult to justify constantly getting more and more long gold, especially with the price action that's had over the course of the last couple of years. Now, I actually will say this. I have actually I was asked to be a guest speaker at a presentation once, just to talk about options. The guy said, I want to just introduce people to ways with which you can invest in physical gold and silver, and I'd just like you to be a guest speaker on how you can actually hedge it if you're interested in doing it. And so I spoke first, talked about various ways you can use futures options. I talked about ways with which you could actually hedge using short futures contracts and just things like that. And I talked about a little bit of SLV and GLD a little bit as well. But then afterwards, I didn't realize this, but I had walked into the biggest silver bull conference that I had ever seen in my life. I've never seen a room full of more silver bulls than I was at that night. And it was just to the point to where if you didn't mortgage your house and put everything you possibly had into physical silver, you were just an idiot. And that's how they kind of wanted everyone to feel that night. And that was the last time I presented for that group of people, but it was a fun time nonetheless.
Yeah, I can tell you some stories. A lot of our guests who speak on this stuff, too, they've often said if they ever have the temerity to talk against any of the metals, they hear about it pretty aggressively. So there still is that strong cadre out there, and perhaps that's some of the reason why those calls are always so juicy. That's good for you guys if you want to do covered calls or collars out there. They're bidding it up so nicely for you, so take advantage of that. We'll have some questions about collars. Maybe we'll have time to get to those a little bit. Before we do that, we got to talk crude, Uncle Mike, because it has been a big week. As you mentioned earlier the week of some of our other shows, it's just an endless pounding that's in store for not just the Gulf region, of course, with Harvey, but now we have Irma and Jose. I think there's another one behind it. There's just this perpetual launching of hurricanes into the Atlantic and near the Gulf and things. So crude has had an interesting tale. I think we were surprised a little bit on the last week's show, and you can probably make that same comment again, just at pretty much what little net on the week we saw out of crude. In fact, looking at it right now, net on the week, crude is pretty much unched from a week ago. So all this noise, all this talk about 20% of the refining capacity capacity out of action for the country, all these other things. We didn't see a huge commensurate move really in crude vol or really in the futures that much. I think we said last week on the show we were kind of surprised how little we saw, and I think you can probably make a similar refrain this week. I don't know anything. I know you like, aside from your crazy out of the money XLE puts, Uncle Mike. What's anything catching your eye out there in the energy sector this week?
Well, yeah, it almost feels like an instant replay of a couple weeks ago I was on, because I remember it was right before the storm was about to hit Houston, and I remember just thinking, okay, well, maybe if you wanted to do a spec play, maybe buy a call spread on crude over the weekend, and then, well, thankfully, that just explained why I don't do spec plays on oil very often, because that would not have worked out. But in looking at this, it is almost like an instant replay. There's not a lot of movement on it. Now, throughout the week, if you look at crude, the underlying itself, we did have a big day on Tuesday. Crude did actually go up quite a bit, and then it was relatively flat Wednesday, Thursday, and then it's having a pretty big dip on the day today. The only thing I can think of with that is that perhaps it's just profit taking of people that just want to be flat this weekend and don't want anything to do with it. But I would still reiterate, even though I was totally wrong on this statement a couple weeks ago going into Houston, but if you are a bull on crude and you want to have some exposure to the slippery stuff going into the weekend, call spread might not be a bad idea to do right now, if there's anyone listening at this point in time that hears this show before markets close on Friday.
Yeah, well, there are a few people listening live out there, but that said, it has been interesting to kind of watch the crude. And you're right, if you just looked at frame of reference end of week to end of week, it looks like nothing really happened. We had some movement, obviously, you mentioned intra-week, but I don't think anywhere near the extremities a lot of people expected. In terms of vol, it's still kind of a mixed bag, kind of pretty much, a little bit bid, a little bit offered, depending on where you're looking, kind of mixed out there. Skew getting a little bit rich, though, up about a point or so. The 25-day traditional, 25 delta risk reversal, so actually net 50 delta. I hate when they say 25, but that's a pet peeve for another day. Net 50 delta risk reversal, up about a point or so, depending on where you're looking on the term structure. That means, of course, those puts getting a little bit rich out there, which is not surprising, given as Uncle Mike alluded to, a little bit of those gains coming back right now. And we are seeing, so many hurricanes coming, and it's still an open question where they're hitting. Probably not headed towards the Gulf, which is one of the reasons why we saw some of this coming in. But still interesting stuff out here for the week. The big WTI contracts, open interest up about 3%, so decent numbers, but not an explosion, not a hurricane, pun intended, of action. And number one with a bullet, we always talk about, people like these even money strikes, and pretty much front month near at the money, near out of the money now is pretty much where the action was. The 50s lighting it up out here in October yet again. Number one with a bullet, the 50 calls, about just a tick under 28,000 contracts. What's interesting about that is pretty much none of that's open net unched on the week from an open interest perspective. So just tons of back and forth on that strike, probably alluding to what Uncle Mike was thinking about earlier. Maybe people specking on the upside when it didn't really materialize, or maybe they're taking some of their gains off the table today. Either way, people net almost literally unch from an open interest perspective this week, which is very rare. You usually see a couple of thousand one way or the other. This time, pretty much unched, which is very strange. Coming in number two, the 51s with about 17,000 of those. Lion's share coming on Tuesday, about 6,000 contracts. Actually, about almost 6,000 coming in again today, too. So today, fairly active. And number three, the 47 puts with about 16,000 and change. Those also net almost unched on the week. So a lot of churn and burn going on out here in front month WTI. Yet again, the weekly's not really materializing a lot. And if you go a little bit farther out, say someone sees extremities, we did see the 75s trading out here in Feb of next year for about 1,000 contracts here, as well as 75s, as well as, of course, the 40s out in June of next year, doing about 4,000 and change. So some weird bits and pieces out there. Uncle Mike, I know we rudely ripped you off the trading desk today when Nick got stuck. So I know you got to hop off in a little bit. So before you go, let's keep on rolling, see if we can squeeze in a few listener questions in our futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, we're running up against it, so we'll forego discussing our question of the week. We touched on it a bit on Vol Views earlier, so you can listen to that. If you want to know more, head on over to Ad Options. You too can vote and play along whatever our current polls are. We got a bunch of good questions out there right now for you. We got a lot of questions also coming in still about the collar study. LLCC, I should say, wants to know, why do you think gold performs so well? In the collar study, he's of course referring to that study where we mentioned gold was pretty much the top performing asset, right up there with the Japanese yen in terms of buying their 6-month put, selling a 1-month call, that type of collar they did out there in the OIC. Uncle Mike, you kind of touched on this earlier in the show. You mentioned it for silver, but you can probably make the same argument for gold. It's all about that inverse skew. That's what makes metals so attractive. Anything else you want to add here to our friend LLCC wants to know why gold performs so well, but also why metals in general are so tantalizing for collars.
They are. It's the reverse skew that exists on it, and I think if you really have a good, firm understanding of it, that's something that I've been doing my best to try to benefit my clients on that for almost 8 years now. So the reverse skew is definitely one of those things that needs to be used if you're looking to collar the metals.
Yeah, and obviously these results are for this specific about 5-year or so period. So, obviously it's going to depend. We mentioned the skew earlier, how rich the skew is, how cheap the puts are. All those things are going to factor into how gold performs. But in general, this is a good representative sample of something maybe you could expect in these types of environments. A similar question from Nelent wants to know, how did silver do in that study? The same as gold? I don't, that's right up your alley, Uncle Mike. Unfortunately, I don't think they included silver. I think part of that was they were trying to study a broad cross-section of assets, so they had to pick representative samples from each one. So I think gold was their representative for the metals. I don't think they had time to include, silver and copper and palladium and all that stuff. They had to kind of just pick one. They have multiple currencies in here, though. So I don't see, I'm looking here, I see USO, I see the NASDAQ, I see Russell, I see even Swiss franc. I don't see silver. So maybe I'll have to suggest to our friends over at OIC, if they do this study again, and I have some pull over there with some of the people. Maybe I can help see if something like that, because this collar study was pretty popular. They should do another one. Maybe they can include gold. Uncle Michael, you're out there trading SLV collars right now. You're trading silver collars. I don't know. You have any data on this you want to share for our friend, Mr. or Mrs. Nelent?
Well, no specific data, but I have a thought on it in terms of what it would be. Silver is very difficult to do a short-term trade on. So, for example, I would collar gold much different than I would silver. So gold, for example, if let's say gold has a down day, then maybe you buy to cover the short call and either wait for it to come up a little bit because you can handle being long premium because you don't have a lot of premium on the table when that happens a lot of times because assuming that the skew worked out in your favor beforehand and then let's say gold just goes on to a rally, a lot of times it moves slow enough to where you can roll the collar, you can roll the short call higher. With silver, I was actually if you guys want to archive some option block episodes from 2010, 2011, I did a lot with silver collars and gold collars together at that time. And the one thing that I took away from that point in time is that with silver collars, you need to be, or at least for me, I need to be much more passive on them. However, with gold collars, you can be a little bit more active because if you're wrong, it can still work out in your favor by rolling up calls. With silver, we made money on it, but you realize all the talk about some of the angry client phone calls, but when I had collared silver, and silver all of a sudden goes from 20 to 50 in a day, it seemed like, back in the 2010, 2011 era. I got an earful a lot of times for, why do you have all these short calls on silver? Why are you bothering hedging with it? And then, I'd always explain to my clients, I'm like, well, this is considered a very conservative investment where you're making like 12 to 15% annualized return on something that you'd normally be making 2 to 3%. Well, that they kind of understood then, but it's hard to watch when you see an underlying of that magnitude almost double. Gold, I was able to keep up with it. I didn't get all the upside. You never will with collars, but I still got a very respectable chunk of it. But silver didn't even come close to it. So that's why I'm much more passive on silver than I am with gold for that reason.
All right, everybody. That music means we unfortunately have come to the end of this epic journey. A little bit abbreviated this week. We had to squeeze a lot in for TWIFO, but it was fun nonetheless. Keep those questions coming. We got more. We got stuff on crypto we didn't get. You guys always hitting us up on the crypto here on the show. I don't know if you know, Uncle Mike, that TWIFO has become the de facto crypto show on my network now for some reason. So we always get crypto questions. Maybe we'll save some of those. I know Nick likes those too. We'll save some of those for next week. Keep hitting us up. We do love to hear from you. But before we go, and Mr. Uncle Mike, before we release you back to the hounds, to the wolves, you're always working on interesting stuff. If people want to know more about maybe they want to collar silver themselves, they want to have you help them, or they want to adjust something they got going on, where should they go? What should they do, sir?
Well, a couple things. I'm actually even going to give you a little bit of a surprise that you probably weren't even expecting today, Mark. We're actually doing a webinar. I'm going to talk about equity options, and we are going to have a CTA to be named later discussing futures options on October 3rd at 1:30 p.m. Central Time. We will have more information on that event. It's a webinar. We're excited about it at RCM, and we'll have more information on it to come in the coming weeks. So check out the option block, because I will be promoting it on that show as well.
There you go, listeners. Once we know more and the details, we'll include it here in our show notes for you guys as well. Or head on over to RCM website. They have RCM alts, a bunch of sites, RCM futures, and you can find out, I'm sure, more details on that. Hit up Uncle Mike, M2saw at RCMFS.com. If you want to learn more about rolling or adjusting silver collars, maybe you just want to have him do it for you, because, hey, you want to sleep at night. Let's let him stay up and babysit the puts and roll the calls and all that fun. You can sleep and have fun, play with your kids, all that good stuff. All right. Thank you for joining us, Uncle Mike. We now release you to go back and roll and adjust your silver collars. And, of course, my cohort, Mr. Nick, could not be here this week. But if you're playing along over there at cmegroup.com/TWIFO, you can see his handiwork for him and his team. Head on over there if you haven't done so. Really, if you're trading these products or even interested in them, if you're not going over there looking at the free data, you're crazy. It's pretty much the only game in town. So go check it out. cmegroup.com/TWIFO. And you, too, can kick the tires and light the fires. And if you get interested, you can always upgrade to the essentials and everything else that they have going on over there. And while you're over there, check out our friends over at CME Group. They have the Institute. You guys are always asking us options questions. They can help you with those, as well as a lot of futures questions as well. CME Institute to learn more. And on behalf of Uncle Mike and Nick, who's stuck on a plane somewhere, and Adib myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And, of course, for sending in such great questions. I promise to get to more of them next week. Don't worry. And we'll see you next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.